What's up, everybody? You already know it's Dave Mo. So, checking in again. I started going through the comments last night, and but first of all, I want to say I appreciate every single one of my subscribers, everyone that was checking in on me. You don't know how much that means to me, for real, straight up and down. Like, the love is real. And just giving that little bit of information. I'm gonna keep doing the best I can to make these videos informative for you, regardless to what the video is about. I'm gonna give you 100% like I always have. But there was a question that was asked, or a comment left, about 2 months ago, and I wrote it down, but of course I forgot my papers, right? Because I'm always running late. But anyway, it was more along the lines of like the comment went something like this: the individual is a rep, and the dealer that they rep for is trying to collect sales tax. So the rep, wants to know how can they protect themselves from sales tax. So let's get into this real quick. Let's understand there's two types of taxes, okay? And this is a very brief, but I need to get this out there for you, and I hope it's not too late. For two reasons. One, I don't want you to burn a bridge with your man. And two, I want you to feel secure in what you're doing. So you're going to want to check what I say with a CPA. But for all intents and purposes, this is how it is. Sales tax. As a car dealer, that you rep for a car dealer, okay? I'm going to play the car dealer in this thing. You're my rep. You go out, you use my license, you buy cars, etc., etc. The dealership I own takes those cars and sells them to the general public. During that transaction, I sell your car, I get your money. I charge whatever fees I want to charge. Registration, dealer fee, sales tax. That's the big one, right? Sales tax. All those fees are mine. The only dollar amount you should be getting is the selling price, which would be line 1. Generally speaking, on a buyer's guide, it's going to be line 1. Line 1. Especially if you're using Wayne Reeves. And I could go further with you guys and get you into Wayne Reeves. A million reasons why I love Wayne Reeves. But that's another video. So, if you're doing your own deal, all right, let's just say this dealer is like, oh yeah, go ahead, you got access to everything, you do your deals. You're going to be collecting all those fees on the behalf of the dealership, okay? So you're going to take what you sold the car for, that's yours. Then all the other fees, regardless to what they are, that's the dealership's. The dealership, so today is the last day in June. Tomorrow's July 1st. So what's that today? 30th then, I guess? Tomorrow's July 1st. When I get back to my dealership July 2nd, I need to tally up, and again, why I love Wayne Reeves, does it for me, all the sales tax collected in every single county I collected in, and it will tell me when I go to the state's website where I need to put it. So I input the values, and it spits out a number and says, you owe this much money. No problem, because what I do when I collect sales tax is I put it into a separate account. I don't touch that money. It's not my money. I'm holding it for the state. They want me to hold their money for a month, and then on the second, I give them back their money. Not a big deal. So that's a dealership's responsibility, okay? Now, I don't want you to be confused with income tax. Income tax is a whole different thing than sales tax. To be clear, for like the third time, sales tax is the responsibility of the dealership. When you, at the end of the year, you get your W-9, your 1099, sales tax and all that other nonsense should not be on there. The only thing that should be on there is the selling price of said vehicle, okay? So you are personally responsible for your income tax. So let's just say you bought a car for, even numbers, $5,000. You sold it for $7,500, okay? The profit on that car is $2,500. For those of you who are really, really new to this, the way we come up to that number is you subtract the cost of the vehicle from the selling price of the vehicle. That number in between is the money you're going to get taxed on. That's, whatever it is. If it's 10%, it's going to be 2,500. It's going to be 2,500. 20% is going to be 500. Whatever tax bracket you fall into, guys. This is why I tell you need to have an LLC, even if you're a single member LLC, because it's a lot easier when you're filing taxes. Let's just say that $5,000 car needed $1,000 worth of work, right? Okay, they don't know that, the in between. What they know is what you paid for it and what you sold for it. Now here's where your write-offs come into play. Well, I needed tires, it needed an oil change, it needed transmission service. All these things added $1,000. So at the end of the year, you're going to give your accountant what you spent on every vehicle. It's a spreadsheet, what you spent on every vehicle, what they sold for, and then hopefully you're using a program like QuickBooks, and you're putting all your receipts into QuickBooks. And then QuickBooks is going to give you a profit loss, right? At the end of the year, it'll give you profit loss for 2024 or 2023, all right? You're going to hand that to the accountant. One of the things that I don't do is when I spend money on a vehicle, I don't put that in my QuickBooks, because if I put that in my QuickBooks and then I'm also putting it into my spreadsheet, then I'm kind of double dipping, right? So you want to pick one or the other. And if you're going to be putting in QuickBooks, you got to spend like $90 a month. Yes, you're going to spend $90 a month because now you need to track inventory. There's other workarounds, but it's really just a pain in the ass. Just spend the extra $60 a month, and then you could do the inventory. The way I do it, very simply put, I bought a car for $5,000. That's the only number I put in there is what I paid for it, and then what I sold it for is $7,500. So on my spreadsheet, it looks like I made $2,500. So I'll give that to the accountant, and the accountant's like, okay, you made $100,000 in cars this year based on your spreadsheet. Then when we pull in the information from QuickBooks, it'll say, okay, you have $50,000 in expenses to cars, office, rent, electricity, meals, etc., etc. They'll deduct that number from the $100,000. Now it's like, okay, you owe 50. And again, you want an accountant because it's not 100% of what you spend. For instance, meals are like 70%. So you swipe your card because you took all your employees out to eat lunch. It was $100. I believe you're only going to get 70% of that. So you just spent $100, but you are only going to get credited $70. And something's better than nothing, because if you did it personally, you don't get anything back. So anyway, back to the moral of the story. That's what you're responsible for. You should be handing that information to your CPA, your accountant, and they will break it down for you and say, okay, look, you're at a loss, so you're going to get this much money back if you paid in at all. So that's a whole nother can of worms that you need to speak to your accountant about. Or you owe this dollar amount, and you'll just pay it and you'll move on. Or if you got a cool ass accountant, you'll talk to the accountant, and you'll want to do this before the end of the year, and they'll say to you, hey, look, you owe XYZ. Let's just say, hypothetically speaking, you owe $20,000. You're allowed to spend up to $25,000 in a business vehicle. So now this is an inventory. This is a business vehicle. Okay. So your LLC can spend $25,000 a year on a car. So you're going to have to spend $20,000 anyway to give it to the government, and you're never going to get that money back. Or you could potentially say, hey, you know what? I do need a vehicle. I need any $25,000 truck, right? Because the truck can justify the means. It's like, okay, I might need to pull cars at some point. I might, have to go to the auction. I need to drive here, there, and the next place. So you go and you spend $20,000 or $25,000 on it. You now hand that receipt to your accountant, and all of a sudden you realize you don't owe any money. Now, it's like, well, yeah, Dave, I'm still spending that money. You're absolutely right. You are spending that money. But at least the money you're spending, you're getting something for it, i.e. a vehicle. It also works with like computers, upgrades to the office, etc., etc. And you'll want to talk to your accountant about that. But long story longer, I don't want you to be confused with sales tax is what the dealership is responsible for paying the state. Income tax is what you're responsible for. So you have no problem, writing a check to the dealer. Like if you collected the sales tax and all the fees, and they're like, oh, hey, I need that money. What I used to do is I would just write a check, boop, 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 and I would put, 2015 Ford Taurus fees plus tax, and I would just write one check, boom. I would just send it to him or give it to him or whatever, or I would even Zelle it to him. Not a big deal. So this way, if my accountant goes through all my bank records, it's like, oh, hey, why were you doing this? Oh, because I collected all that money, and then I deposited it into my bank account, my business bank account, and not all of that was mine. The only thing that was mine was the selling price. So everything past that, I wrote the man a check for, because it's money in, right? So once the money comes in, you have now made that money. So you need to get rid of what's not yours, and you get rid of it quickly. And I can elaborate a little bit more. I'm here at work, and I can elaborate a little bit more with how I do it now at my dealership. I don't know what time it is. I think I got time. So what I do at my dealership is the landlords, right? They wanted to open up a car dealership, but it was a bit much with all the other business they have going on. So I treat them as reps. Now, I don't have reps, but I treat them as reps. And what I did is I went out and I opened up a floor plan. I don't want to say it's for them, but it's for them. So when they buy the car, right? They buy the car through the floor plan, and they could pay it that night. It only charges them like $3 for one day. Either $3 or $6, depending on how much they spend on it. I have an AFC daily plan. Love that plan. So then they'll pay it. But the reason why I do that is so no money hits my account. No money hits my account. So AFC, they have their bank account set up with AFC. AFC is great because you can have multiple bank accounts set up. And they take money, they ACH it from their account into AFC, and then AFC, releases the title, etc., etc. So now I have the car. When the car gets sold, I look at it and I'm like, okay, the car sold for this. This is the selling price. Out of that selling price, if they owe money to, let's just say, Leroy the mechanic or the transporter or anything like that, because we have accounts, so we're able to run up an account and we just pay them off whenever. So then what will end up happening is this car got sold. I have a spreadsheet of everything for every car on the lot. It's itemized what was spent on it. If it was not paid by the time the car sells, let's just say they just got done doing work to it, came to the lot, it sold the same day, then I just simply take all those invoices and I deduct it from the sales price. They'll get a check for that dollar amount, the deducted dollar amount, and then I write checks to whoever is owed that money. I don't make any money on this deal. The main thing for me is when, again, talking about me, when I'm looking at it at the end of the year, I don't make anything other than my dealer fee. That's all I make. It's $300 my dealer fee. That's all I make. So when they go to do their taxes at the end of the year, they're only going to be paying taxes on the profit margins after their deductions. Now, I don't think it really matters if I pay it for them or they do, because if I pay it for them, they're just getting less of a check. So it's not really a big deal. And then what I do is I hand them an envelope. They have copy of all the checks that I wrote against the sales price for labor and so on and so forth. They also have all the invoices from whoever they did business with to get their car going. And then they get the buyer's guide, the bill of sale that shows them what the car was sold for. And then, of course, they get their check in one envelope. And if there's any, I like to be in the office when they pick it up so they could sit down, they could open it up, they could ask questions, and I just believe in 100% transparency. That's how I run my shop. There's no, in my opinion, there's no reason why there should be a gray area. It's black and white. This is what it is. There are no excuses. There are no ifs, ands, or buts. This is what it is. We agreed to it. I had to hold up my end. You hold up your end. That's it. But if you're still watching this video and I forget your name, I apologize so much. Leave a comment below. Let me know if this helped you out at all. And the main thing to keep in mind is, if the dealership is asking you for the sales tax money, you're fine. That's their responsibility anyway. If they're asking you for your money for your income tax, no. They're not your accountant. They're not your... nothing. Nothing. You are responsible for your income tax. You don't give that to no one to pay for you. You don't trust anyone with that. You're fucking around. You're messing around with Uncle Sam. Do the right thing. Get yourself an accountant. Spend the dollars. It's a write-off. So is QuickBooks. It's a write-off. Spend that money and make sure you got yourself in check. Because I can tell you right now, more times than not, people think they're slick, doing this, that, and a third, and they end up finding themselves with these crazy tax bills and really no money, and they're so far in the hole. It's like, damn, how do I get out of this? It's a daunting task. You think debt is bad? Wait till you got debt with the IRS. I straight up just dropped that phone. So let me just get to this again. Stay blessed, guys. Count your blessings. Be grateful for everything you have. Good or bad, just be grateful. Anything can turn into something positive in a heartbeat. It's all about how you perceive things, the perception. And definitely always love yourself, love your loved ones, you know, let them know how you feel. All right, no one's promised tomorrow. I hope this video helped. I hope it finds you in great health. I'm out of here. I gotta go to work.